Unfortunately, we have to do it in a hybrid way, but I think we will manage because in the meantime, everybody got used to having meetings in a hybrid way. In any case, a very warm welcome to all of you, to all the participants of this, I would say, this third webinar we organize in the framework of financial inclusion, access to finance. It's another word. You know that access to finance, it's one of the basic needs. It's declared as one of the basic needs apart from food, housing, clothing. Well, basic access to finance is also one of the basic needs. And that's also why we, as the MED Confederation, which is promoting the socioeconomic cooperation around the Mediterranean, took this issue as the work program for this period. And we have already organized in the past 2 webinars on this topic, but I would say on specific themes within the framework of financial inclusion. The one was the COVID-19. What is the impact of COVID-19 on financial inclusion? And I think that those who were participating, they can say that this was a very successful webinar and a very rich webinar that we had. The second was focusing on youth financial inclusion, because also youth is very important, especially in Africa. And now the third one is focusing on SMEs and small and medium-sized SMEs, because we think that financial inclusion should not be focusing only on financial inclusion of individuals, but we think that financial inclusion for SMEs is as well important as for individuals, or even more important, because SMEs, it's really the backbone of an economy. And when SMEs are not working, the economy is not working. And you see this in a lot of developing countries where there is a lack of SMEs, that also there is also a very big difference between poor and rich people. So SMEs play a very important role. And even not in developing countries, but also in developed countries such as Europe, where for employment, for tax paying, and so on, SMEs is very important, also for the youth and for creating employment. So I would say I stop here with my short introduction. I welcome you all. Don't hesitate to have and to contribute to an interactive webinar. I think this makes it very lively, even when it's in a hybrid. So I would suggest we start. We start with a panel. I think, Roger, will you introduce the panel?
Sure, Chris. Thank you so much, and a warm welcome to all the representatives of public banks, credit guarantee institutions, international financial institutions, as well as other experts and attendees who have decided to join us in this third MED Confederation event on financial inclusion. And thank you also to those that are following us via YouTube, not only Twitter. I'm delighted to moderate this session with so many prominent speakers, our dear panelists, which I will present to you right away. But before, allow me to say only some introductory words on the subject of today's discussion. In fact, on Monday last week, ministers of foreign affairs of the 42 countries of the Union for the Mediterranean convened in a ministerial conference here in Barcelona with the aim to reaffirm its attachment to the cooperation in the Euro-Mediterranean region. And among the main priorities for action that were jointly envisaged by the ministers, there is the need to foster sustainable and inclusive economic development that helps create long-term employment and enhances SME development that also contributes to the recovery of our economies. And particularly what the banking sector, the Mediterranean credit guarantee institutions and international financial institutions are doing at the moment is very important. And you do it at a crossroad with lots of uncertainties in the horizon, with the COVID crisis, interdependencies between the northern and southern Mediterranean countries, and increasing rivalries between countries that have accelerated in a number of fronts. The unprecedented self-inflicted recession of the year 2020 as a result of lockdowns and restrictions over the economic activity requires a more coordinated collective response. We need to use every possible dose of multilateral and regional cooperation to pursue this collective response, because both states and societies have tremendously weakened in the struggle against this global pandemic. In this line, the European Commission and the High Representative for Foreign Policy issued last February a joint communication on a new agenda for the Mediterranean. In this endeavor, financial inclusion was reckoned as a tool to tackle the funding gap for SMEs in the region that constitutes a real brake on the development of southern and eastern Mediterranean countries, as our president was just mentioning. On access to finance, the EU intends to work with international financial institutions to develop a comprehensive approach. Against this background, EU institutions have identified within this new Mediterranean agenda a flagship initiative number 5 entitled Connecting Economies, with the aim to strengthen banking and non-banking financial institutions in order to expand financial inclusion, including in the social economy sector. This set of measures aimed at compensating the effects of an economic crisis that is still impacting over millions of people in the region, and that have been followed by recovery plans implemented by almost all governments in the Mediterranean region. The problems that MSMEs face to access funding have been aggravated by the pandemic, but they are structural in the region and they come from much earlier than when the pandemic began. To mention only a few of these challenges that our dear panelists will for sure address, MSMEs have difficulties to access to funding, both public and private. In Egypt, for instance, only 6% of MSMEs have had access to a credit line recently, or in Morocco, where the situation is much better, only 18% of the banking credit goes to MSMEs. In the northern Mediterranean countries, the situation is better, but yet it is one of the problems often mentioned by the business support organizations, the chambers of commerce, and the MSMEs themselves. A second blocking point for MSMEs to flourish is the high rates of informality of the sector in the region, which is more acute in the southern Mediterranean countries, with rates sometimes surpassing the 50 or 60%. Think of Lebanon, for instance, or Egypt. And a third blocking point that I would like to mention in the difficulties for MSMEs that they are encountering is when they intend to go international. Both in terms of export capacity and also in terms of benefiting from global value chains or regional value chains. For instance, 88% of small companies in Tunisia do not export, and across the southern Mediterranean countries, only 0.4% of MSMEs benefit from global value chains. These are only some of the facts that we have in mind when addressing today's topic, and I think that we have an outstanding panel to answer to some of these questions that I would like now to present. First of all, I'm delighted to introduce Mr. Hisham Zanati Zerghini, who is Director General at Société Nationale de Garantie et de Financement de l'Entreprise au Maroc. This society has been now branded as TAM Will Come, which is a very fancy branding name. Congratulations. After 70 years of the existence of the previous Caisse Centrale de Garantie, CCG, which is a partner that we have been cooperating now for many years. Mr. Zerghini is also the president of the Professional Association of Guarantee Institutions in Africa, the chairman of the board of directors of the seed fund Azure Innovation or Innovation, and the chairman of the supervisory committee of the investment fund PME Croissance. Mr. Zerghini, we are very happy and delighted to have you among us. Please, the screen is yours.
Yeah, it's easier to me to speak French, no problem. Okay.
Non, il n'y a pas de problème. On a l'interprétation en direct.
Yeah, vous m'entendez?
Can you hear me? Yes, we can. List many thanks for the organization of this workshop, this webinar, on which we discussed about the funding of companies. You will understand that I will talk of the Moroccan example, because through COVID crisis, it is one of the main points I will address. As in other countries, Morocco was hit by health crisis, the COVID-19 crisis, pandemic, and from the very beginning we had to react so we could face the repercussions of this pandemic. In general terms, on the health sectors, Moroccans are hit by this pandemic and this economic crisis, but an organization so we can make a decision on the economic and social point of view with the creating of the directives and the endorsed by His Majesty. With a governance, with a steering committee, so we can accompany the crisis. And amongst the things we tackled, we were envisaging how to accompany the companies. We were deeply hit by lockdown. The activities stopped, and the needs were here. There were some expenses, personal expenses, of course, staff expenses, and the first reaction was to set up a committee, an oxygen. Sorry sometimes for the translation, because the sound, we get the sound not too clearly. We're sorry for that. We want to respond to the needs of the companies. So, I am not talking of alleviate, but providing necessary funds to help these companies. And there was this general issue. We worked with the banking sector to be reactive so that we could raise funds. That's what we could do, and the banks could obtain some guarantee for 49,000 credits. After the lockdown, we launched a global recovery plan with up to 7 billion euros to the companies to recover their activities. We wanted to fund, instead of doing it through the classic exploitation line, we wanted it to be on the long term so we could fund the losses registered for the 3 months of lockdown, and afterwards recovery of the activity, which will not be fast, as we all might know. I can say that there is a very specific economy for the very small enterprises, also for the SMEs. The sectorial approach was present because the access to funding, there is one sector which is very important, such as tourism, and mainly for this touristic sector with these investments done by these companies. There was a specific committee for an important sector, which is the real estate sector. COVID pandemic was slowing down this growing process. I have to talk about 7 years maturity loans. We try to fund these companies until the end of the month of December, and we decided to extend these credit loans for 3 more to 6 more months to fund the companies in need. We also addressed we were acting on about 50,000 companies. So in all, for one thing or another, we could guarantee up to 100,000 credits guaranteed by the institutions after 70 years of services. So maybe if necessary, I will try to tell you about a new model of credits. The access to funding is a central matter. It is true that we were massively present during this lockdown. What are we doing afterwards? I think that the companies, and I am talking of the SMEs essentially, they will be more in need of us. Why? Because after having helped them to overcome this pandemic, we have to allow them to further extend, to further develop. I am talking of investments because the recovery comes thanks to the investments, and we have to have in mind the current situation. We will be able to think on how we can give them some margin. They do not have to be over debt. How can we transfer this balance of the companies? That's where we can think about and we can help them. We are talking of this economic dynamics. We were talking about the economic fabric in Morocco. So the question of the economic recovery is center. So we want to avoid this debt burden of the SMEs in Morocco. 95% are PTEs, the others are the micro companies, represent up to 95% of the total industrial fabric. There are more than 400, about 570,000 companies in Morocco. The challenge is that of having many more companies, and the development of companies is a central issue. The access to funding is essential. We are trying to bring an answer through these guarantee activities, also with co-funding, so with several governments. The startup issue is very important. We are going to put on the table several funding tools to fund startups, and the access to financing is very important. We have an increasing debt vis-à-vis last year, but we have to say that we could respond to the needs of up to 60,000 companies. The companies in the informal sector can move to the formal sector, and this can be done provided that the conditions are beneficial for the formal companies, so they would have a real interest to get formal. As for business creation, we launched in 2020 Terrapon, a new project with the banking sector. We are targeting the 7 first years. Unfortunately, we were slowed down by COVID, but results are excellent, because in 2020 and 2021, we reached about 95% of the goals set in 2019, so just before the pandemic. Last but not least, the challenges are very relevant. The challenges of COVID are critical, but because we are talking about the future of debt and the future of the development of the companies, our role is that of being here. We want to help companies to overcome the difficulties they are facing, and the political support is necessary. We start from the principle that an indirect intervention of the state is necessary to correct the imperfections of the market. Your intervention is necessary because there can be a return not on the activity of the institution, but on the economic activity. Thousands of jobs will be created. That's where the state will win, and not the financial institutions. Of course, we need norms, a good governance, a good banking supervision, taking into account the specificity of the institution, as well as a good governance. In my opinion, this good governance is paramount to carry out this strategy. We will pass with a new governance, with a renewed banking supervision, with new regulations. Thank you very much. Sorry for the translation. We just heard about 60% of what was said, but I hope we could.
4 elements of your intervention. First is that economic recovery is taking much longer than we expected. This has been always the case, or at least recently the case for all the economic crisis, but it is true that with the COVID crisis, we all expected to have a quicker recovery. This lengthy process is not only impacting the southern and eastern Mediterranean economies, but also the northern Mediterranean economies, as we see it here, for instance, in Spain. Then I would also emphasize the issue of the size of the companies. This is a particular feature of all Mediterranean economies. We have our productive tissue very fragmented, very atomized, and of course the lack in accessing to funding for most of the MSMEs companies are actually hindering the possibility for these companies, especially for the micro companies, to grow. Then you also raised a very important subject, which is how to transform informality into formality, and all the programs that you have been implementing from CCG before, and now TAM will come. And finally, a very important and crucial issue, which is the governance. And of course, governance implies not only to fight corruption, as you mentioned, but also the fact that public authorities need to intervene the market to correct these failures of the market, and particularly when we assess the situation of the MSMEs in our economies, we clearly see a failure of the market, and therefore the intervention of the public sector is very justified. So thank you very much. We move to our next speaker, a bit further to the east of the Mediterranean, but still in the Maghreb. And I'm very pleased and delighted to welcome Neila Gharbi, who is the Acting Director General at the Caisse de dépôt et consignation in Tunis. Mrs. Gharbi is also the chairwoman of the board of director of the Banque Nationale Agricole en Tunisie. And she has also been the Director General of CDC Development since May 2019 and a senior state official. Mrs. Gharbi, we're very happy to have you among us, also as Vice President of the MED Confederation. So the floor is yours now.
Merci beaucoup.
Thank you very much. So I was very well introduced. I was just appointed General Director at the CDC of Tunisia after having been DGA for almost 4 years. I will tell you today about the role of the Caisse de dépôt et consignation in the funding of SMEs and startups after the COVID pandemic. Our role is mainly to try to find a funding mechanism that can allow the survival of these startups and these SMEs during this crisis period. First of all, I want to introduce the Caisse de dépôt et consignation. As you know, it was created in 2011. It depends on its trading legislation with a particular statute, with governance, which is very particular. There is a surveillance commission. We are not as big as the CDG, but we are about 50 people. We are managing an average of revenues of 700 million dinars. 8,000 8 billion dinars. The money we manage, we collect the consignations, and we use our resources to finance, to fund the economy, invest in huge products, supporting the SMEs and dynamizing the markets. So the Caisse des Dépôts is certified as for a financial structure and financial strength through this certification 20,000, and there is an accreditation, an ongoing accreditation as for climate affairs. Caisse des Dépôts is present within the main technopolis of Tunisia, Technopole Bochena, Polytech of Gabes, Innovation Cities, which is known in innovation and new technology, Technopole's Fax in new technology, SAIP, in the south of the country. We support digital transition. We are a main actor in the funding of innovation as well as the energy transition, and we launch some initiatives such as the Renewable Energy Fund that we are restructuring with the BAD, as well as direct funding of projects as for renewable energies and climate funding projects. So the intervention of CDC is a direct intervention in equities or quasi-equities, and the indirect funding via the investment funds. As for direct investments, we are in 21. We participate in 21 direct projects within the financial sector, innovation sector, the development sector, and the CDC is funding huge projects and projects in these public and private partnerships. As for indirect, we are present in 21 SCPR. They are regional development funds launched by CDC, and this is to respond to the need of capitals in quasi-equities of the SMEs. We are also in these general funds managed by 5 managing companies. We are present also in a bilateral fund, the SCPR, created by France, and we are also present in the CNC3 and Blue Peak funds. The CDC subscribed for 172 million dinars in SCPR and 15 million euros in regional funds. There was a multiplying effect of 17-fold as for investments and 17.86 as for fundraising. What about financial dynamization and what we are presenting to support the SMEs, which go public for an amount of almost 30 million dinars, and the funding, the dedicated fund to the companies, family companies. We try to develop all the convertible obligations to initiate, to oblige these companies to open their capitals and to go public and to be listed. With the funding line with the World Bank, and now there are many SMEs funded with capital or very limited capital. We are initiating other funding mechanisms such as basket bonds. Basket bonds allow some companies to regroup, to raise funds together, taking into account the size of the companies that we have in Tunisia, and we fund climate activities, the energy transition programs, and we will be able to raise funds before these donors who are targeting these funding programs. We made some surveys with the SMEs, and most of them were hit by the pandemic with a downturn in their revenues or decrease of the orders. And some SMEs even closed with the slowdown of the company. Even though there was an aid from the state to the SMEs during the COVID crisis to compensate the revenue, the sales decrease, so they could pay their expenses and the cost, the fixed cost. The central bank, there was a try to postpone the maturity or the completion date. And there was a measure to postpone this completion date to give special credits, COVID credits, with debt restructuring funds. As for the startups, taking into account that they do not have access to the banking funding, CDC launched the SAFE program, and we could raise funds by the EU within a European program to respond to this urgent need of the startups, so they could cover the survival expenses, the post-COVID survival expenses. This program was very positive for these startups, and this has allowed a synergy between the state institutions, private sectors, and the actors of the players of the civil society. We were in contact with the accelerators to identify these startups so we could reach them easily. This was done through the setting of a platform which had been set up during the pandemic and lockdown. There was this strengthening of the economic resilience of these startups which were facing COVID effects. The situation, the urgent situation, also demanded to think, to structure some funds, the fonds d'urgence, and they reached 300 million dinars. These urgency funds were structured during COVID period. We had the aid of SAAG, and through the Tunisia Jobs Program, we could prepare these funds, the aim of which are the fight against the pandemic. We wanted to structure the companies facing financial difficulties during the lockdown stage and the following one, and we wanted to reactivate the development of vectors guaranteeing the support through the Fonds Relais, a relay fund, to reduce the risk of liquidity of cash flow. And the CITA, we wanted to free new investment capacities and boost subsidiaries in the regions in particular. So, amongst these funds, we had the Collet Fund, aiming at financing the exits. There is also all what is the exits of the funds and the funding of the SMEs, Tukashi and Tukashat. The Impact Fund is an impact investment fund dedicated to regions. The Spire Fund, we called it Initiative Aspire for the restructuring of the SMEs hit by the COVID crisis, and the Empower Fund, much more important in size for the Empower. That means 300 million dinars. That's to fund the SMEs that are not facing structural difficulties and which have a potential of development. And this fund is much more important, being of more than 5 million dinars. We try to respond to all the demands. The Aspire Fund is between 1 and 5 million dinars. The other one, we couldn't hear it, is less than 1 million, and the Relay Fund between 3 and 6 millions, and the Empower Fund is higher than 5 million dinars, up to 30 million dinars. The Empower Fund, after there were 2 compartments. The B1 was devoted to this managing society, co-managed with an English company, and the A compartment, we are going to relaunch the choice of Société de Gestion that will manage it. So presently, we also launched a period COVID initiative through the creation of the digital plan, this platform. We call it Je serai best. We developed it with the Stock Exchange of Tunis, with the Tunisian Association of Investors in Capital. The aim of this platform was to put in contact the SMEs and the investors. This process allows, thanks to this platform, to study this report, these funding files, and the contact with the investor takes place just when there is the signed agreement. So This platform is being managed and followed up by the CDC. We made this exercise, we launched it in October 2020, 1 year after we had 58 investors registered, 2,600 SMEs also registered, 394 of them were requiring capital funds, whether it is managing societies, SICAR, or other funding, capital funding structures. We had 29 positive cases, and there are 75 companies which are on the due diligence process. We also took into account the gender issues with 15 women as promoters. And last but not least, I will end up with the funding of startups. The program, which is known under the name of ANAVAN, this program has been structured by the CDC. The survey was carried out under the umbrella of CDG, and there is a funding program of $75 million for the startups, the management of which was guaranteed by the CDG. There is the fund of funds, and the fund of funds is for the China that are funding the startups, and the second one is the Innovatech fund, and this finances the innovative SMEs. So this has been funded by the World Bank and the GIZ. We are the only ones subscribers about the Fond de Fonds, and on the Innovatech side, there will be some fundings with other funds. Some other initiatives were launched, such as the one aimed at accompanying the initiatives in the fight against unemployment. And this program allows the labeling of startups, the assignation of services to startups, the training of agricultural activities, because there was such an initiative consisting in making, let's say, making a first fair trade platform in Tunisia for the agricultures and as well as the women. All the programs were done with the AFB, Femmes Accélération Startup et TPE. This program aims at funding the startups, the very small companies, as well as initiatives and programs which want to develop the women entrepreneurship. I was a bit fast to tell you what we've done so far, and I will be available for your questions.
For this very comprehensive presentation of the array of initiatives, programs, funds that you have created, it is encouraging to see that despite the difficult situation that Tunisia is going through at the moment, both politically and economically, there are institutions like yours that are actually well, trying to change and help the environment and the situation in the direction that you just mentioned. I would like to retain the programs that you have implemented in the field, in the scope of green finance. There we have a great opportunity to advance in the direction of building more not only sustainable but also resilient and inclusive economies. And I think that it's a very good and prominent sign that you are currently already stepping into this field. And I wonder whether green finance is also an instrument to accelerate financial inclusion. To discuss about these issues and others, we do have two other prominent speakers. I will now present the third speaker of today's webinar, who is Nadine Shehad, who is a senior financial sector specialist and also a representative of the consultative group to assist the poor in the Arab world. Nadine, we are very happy to have you among us, and the screen is now yours.
Thank you, Roger. Thank you, everyone. It's been fascinating presentations. Thank you for having me. I'm delighted to join again, although virtually. I've participated in our past webinars. I will have a few slides, so I will start sharing my screen. Give me just a second. And I will cover two topics that we already touched upon with both Hisham and Najla, which are the micro enterprises on the one hand, informal sector, and the formal sector on the other one with the SMEs and access to finance. I'll try to stick to my allocated 10 minutes. Do not hesitate to interrupt me if I go over time. So I hope you can all see my screen, and I'm going to start immediately with a bigger picture of who is lacking access to finance in the region. A lot of adults, around 42 million people who do not have access to an account, very low penetration of insurance services, around 90 million people who borrow informally, 20% of them who actually use micro enterprise loans, and around 63% of approximately 20 million MSMEs who do not have access to finance, with a gap estimated at around $200 billion, according to the SME Finance Forum. So during the COVID time, we looked at what happened on the one hand to micro enterprises and microfinance institutions who typically extend loans to them. And I'd like to remind what my predecessors already said. The pandemic has impacted quite significantly the entrepreneurs and the small enterprises. We've seen 50% income reduction, with women hit hardest. A lot of them have actually dropped out of the labor market because a lot of the household care lies on them. 1 in 3 households are unable to sustain their basic needs for more than a month. And about 35% reported a decline in business income. And I think we've seen what that meant in terms of response. There has obviously been response from the authorities in a lot of countries. And indeed, the recovery is being slower than anticipated. So when we looked at the microfinance institutions who cater for the informal sector and the micro enterprises, in 2020, we were very afraid that they would run out of liquidity. And so we're very afraid of the sort of scenario. You have lockdown, moratorium, less repayments, bigger losses, less cash, a liquidity crisis, and eventually an insolvency crisis. And throughout the presentation, you'll have links to various publications that we've done. If you're curious for more, don't hesitate to go there. And so interestingly, a survey has showed that lockdowns have had quite a moderate impact on operations. You have some branches that have closed, but not so many. And then some of them reduced their working hours. But again, a vast number of them has been able to continue operations, especially the ones that were digitized prior. Now, lending has reduced. Obviously, the economic activity was reduced as a whole, and around 2/3 of MFIs have cut their disbursements by more than half. Some of them have completely stopped lending for a little while. In terms of liquidity, our fear of liquidity squeeze overall was not there. So this is how much liquidity was available in 2016. This is what you see in 2020. The two graphs are roughly similar. And this is a lot because of what was mentioned earlier, moratorium on the one hand, be it from the authorities or from the international lenders. And so today what we see with the economic activity that starts again is that credit risk has increased. That's the red bar. You see it's across the world significantly higher than it used to be. And those losses are not yet in the balance sheets. The provisioning is not yet sufficient. We expect, given how hard the entrepreneurs themselves have been hit, we expect a number of those credit losses to just materialize in the coming year in the balance sheets. And this might mean that the solvency risk could nearly double in a year. Who is that going to hit? Usually the smaller microfinance institutions that tended to have less access to market, less strong systems, and less reserves, obviously. And so that's the situation on the micro sector and the informal. Just to move from here on SMEs and fintechs. And so the finance gap for SMEs in the MENA region, as we call it, so I'm more focusing on the kind of southern part of the Mediterranean. We're speaking $123 billion. 97% of the businesses in the region are SMEs. They employ 50% of the labor force. They contribute to up to 40% of GDP. And we expect them to create, at least according to research from the IMF, around 8 million jobs in the region, which is why a lot of attention is focused on them. So where do we stand in terms of solutions to close the financing gap? And so for the past 2 years, we've done quite a big landscaping study of the region to analyze the fintechs that are operating and to see which ones might advance financial inclusion on the one hand and close this financial gap for the SMEs. I'm not going to get into the details. The fact is that you had high financial exclusion rates, some countries that had improved their regulations and access to mobile and smartphones that was quite high. So we did that study for about 2 years. It took us a lot of time to define what is a fintech. We've covered 22 countries in the region, but we had a big focus on 6 of them, including Tunisia and Morocco. And we really tried to understand what difference for financial inclusion they would make. And so our big conclusion is that the revenue potential, if only 50% of the untapped market is covered, is of around $7 billion in terms of potential. So that was like our big message to investors to come and put more money in the sector. And I'm going to get into in a second into the spillover effect and how can this improve actually access to finance to MSMEs very concretely. So when we look at the breakdowns of those fintechs, a big chunk of them were doing payments and remittances. A lot of them were doing either mobile wallets on the one hand, so offering products directly to individuals and consumers, or helping banks to develop more payments and digital services. And that's really important because what we have seen globally is that a lot of the ease of access to finance afterwards rides on those rails. So you first need to have those digital payments that are in place so that you can eventually utilize the data to do a different sort of underwriting, eventually cheaper, lower the cost, and access more individuals or MSMEs. I'm not going to get into the details. If you're curious to know more, you can also get on our website. The study is available. We looked specifically at financing SMEs. Surprisingly, there were only 5% of the fintechs that we have identified that were focusing on financing SMEs, although there was this huge gap. Now, a bigger number, around 80 of them, were globally supporting SMEs. What were they doing? They were digitizing the typical processes that SMEs have that are often manual. And this digitization is specifically what might help in a couple of years down the road, the financier to come and leverage this data to do a better and different underwriting. I'm going to stop here for the sake of time, but happy to answer any questions you might have afterwards. Thank you.
Well, thank you very much, Nadine. In fact, we are starting to receive our first questions. And I have to say that we already got 5 or 6, but of course there is more time until the end of the session for participants following us either from YouTube or from Zoom to send us more questions. But thank you so much, Nadine, for such an enlightening presentation with lots of figures, in which I would emphasize first of all the problem that of course for many years we have already envisaged that women have in the region. You mentioned that this 50% income reduction with women hit hardest, taking into account that women often have much lower labor participation rates. So the starting point is already lower, and of course the COVID-19 pandemic has been hitting them very, very hard. Then you also gave us some facts that are not very encouraging, especially for the micro sector, for the microfinancial sector, especially when it comes to NPLs coming up, which I presume that they will not only affect the microfinancial sector, but also the whole financial sector, but especially the microfinancial sector is weaker. So of course the impact can be stronger. And finally, I will also retain this revenue potential figure of $7 billion US. I understand this was for the whole Arab or MENA region. Which is indeed a very high figure, and a figure
that was just for 6 countries actually. That's
only for the 6.
Bridge 50% of the financial inclusion gap only
for the 6 countries of the Arab Mediterranean countries. So it's even more astonishing, and I think that public decision makers, probably they already know that, but public decision makers should certainly think about the the potential that is missed and that is somehow untapped in the region. Okay, let us move now to our last speaker before we open up for questions and debate among our dear panelists. And I'm very pleased and delighted to introduce to you Jessica Alfaro, who is a financial sector specialist and currently financial sector specialist at the SME Finance Forum. You know that the SME Finance Forum, that this is an institution that we cooperate with, was established by the G20 Global Partnership for Financial Inclusion, and is currently managed by the IFC of the World Bank Group. Mrs. Alfaro is also a visiting lecturer at the University of Navarra in Pamplona here in Spain. So Jessica, we're delighted to have you among us, and I'm pleased to give you the screen and the floor, as we often say.
Thank you very much, and I will also try to stick to my time. Very pleased to be here. So thank you to our hosts. Very happy to just kind of give an overview of some of our data and looking at MSMEs access to finance and what are some of those main challenges as we go into the recovery. So next slide. Very quickly, the SME Finance Forum, we're a network of 230 members across 70 countries, operating in 190 countries, and we're a mix of financial institutions, fintechs, DFIs, regulators, and working in these different areas. So next slide. We have a pretty diverse membership as well, and so a lot of our data and information is on the global scale, but we do have some data and information that I hope that can be used to support and benchmark some of the information that we've seen. So going to the next slide. So what are some of the major barriers to access to finance for MSMEs in the Mediterranean region? So as we know, MSMEs are one of the strongest drivers of economic development. I think the number was that 97% of businesses are in MSME types of businesses. We're seeing that could be as high as 90 to 99%. And obviously, we know that this is a major access to employment. Access to finance is typically one of the most critical barriers to growth for these micro and small businesses, and really showing that then that potential for employment, that opportunity for employment remains untapped. So we look at this MSME finance gap. We look at it on a large scale. We also identify it by country. And so we're seeing that this finance gap is over 5 trillion USD globally. We also have that broken down by country, disaggregated by gender in emerging markets. And so if that's helpful for your work, please do take a look at that. So next slide. So something we continue to hear, what are some specific barriers? So I think Roger talked about this, Nadine mentioned some of these as well, but some of those specific barriers, when we look at them, are both on the supply and the demand side. So certainly small businesses have difficulty in growing. They may not have strong financial data for banks that banks and institutions are looking for. There's also the informality of small businesses, which financial institutions don't like. So they may be considered too risky, too expensive to lend to. On the other side, we look that there might be entrepreneurship might be underdeveloped. There might be some difficult business environments, political instability. And so this is quite difficult. Also, SMEs tend to be overrepresented in some of the industries that were hardest hit by COVID. So tourism, retail, construction, transportation. And so this is restricting and constricting employment even further. So next slide. So how has the COVID crisis impacted access to finance for MSMEs in the region? One thing that we started to do right at the beginning of the COVID crisis was try to get a pulse on what was happening with these financial institutions, and further to get a pulse on what was happening with their small business clients as well. So we did our most recent pulse survey over the summer. So I want to share some data from there. It's all available on our website. So hopefully both these slides and these website links will be shared after the session. Next slide. So you can see who responded to our most recent survey as well. Again, hopefully this will be a benchmark and show that we do have representation from the region that we're talking about as well. So slightly different than what CGAP had talked about. I hope that we do have a little bit of positivity that we're seeing as trends from April of last year to the summer of this year. So whereas next slide. Whereas we are seeing that portfolios have been negatively affected, we're seeing less of our members saying that it's a significant negative effect. So it's only a slight negative effect at this point in time. Next slide. We're also seeing that a larger number of our members, so generally financial institutions, are continuing to lend to both existing and new customers. So whereas we definitely did see some tightened credit, our financial institutions are reporting back to us, our members are reporting back to us that they are continuing to lend. And we're even seeing a majority reporting that they're lending to new customers, although it tends to be mostly in existing sectors as well. And lastly, next slide. We're also seeing that our members are reporting that the situation of their SME clients is improving as well. So most are saying that less than 20% of their SME clients are in a major financial distress, much better than we were seeing from 18 months ago. So overall, we see some positive changes. We don't necessarily see that this issue is resolved, but we're seeing some positive changes since the beginning of the COVID pandemic, and also positivity from our members that things are improving for the future. So next slide. So what are some opportunities as we move into recovery? So there are major opportunities both in the green and digital space. And so we're seeing some cross-cutting themes in green finance and then digital innovation and technology. So one thing that we saw early on was that there was a major digital divide between SMEs and then large businesses. So a lot of SMEs were really ill-equipped to move their businesses online to digitize. But those that were able to do that found that they were able to be more productive, they were able to grow their businesses, be more efficient, and really reduce some of those barriers to access to finance as well. Another area, and I know we've been speaking about this throughout, but SMEs can really play a major role in this green transition. So moving towards more sustainability, moving towards a more green world as well. So when we see these opportunities come together between both digital tools and green, we can really see that those tools together are driving us towards more of a green transformation. And so wanted to just go back to our pulse survey just to look at some of that impact and that positivity that we're seeing around digital tools and digitization. So if we could go to the next slide. So one thing that we're seeing that many of our members started digitizing and moving towards a digital transformation quicker. And the biggest area that our members mentioned was in the area of payments, but we also saw a number of institutions moving their loan applications online as well. And so next slide. We're also seeing that their operations are being automated as well, further leading to help support these SMEs during COVID and into recovery. Next slide. One of the major areas has been around API technology, so around open banking. So it'd be great to hear from some of the banks or get questions around, how this has supported your institutions, if this has been possible, if it's driven your digitalization faster. That's what we were really seeing. And others were incorporating AI, machine learning, cloud computing, and blockchain as well. Next slide. Also, we're seeing that more of our member institutions are interested in or partnering with fintech. So obviously, as we have more access to data, more access to information, these partnership opportunities between fintechs and financial institutions are a good idea. So last slide, I want to stick to my time here. So some of the key policy recommendations that we see, and this really comes from, we had our most recent global SME finance forum, and that was around greening SME finance, also from our pulse surveys, really supporting SMEs in their digital transition, also helping them to green their businesses. And so this can be support in terms of training, financial, technical assistance, to drive green practices and also to help their businesses become more digital. And also for opening up for stronger partnerships between fintechs and financial institutions as well. So hopefully that ends us on a positive note, and very happy to answer any other questions as we move into the Q&A. So thank you very much.
Well, thank you very much, Jessica, because your concluding presentation gave us strength and indeed you brought us some optimism, that it's so much needed at the moment. One of the problems that we realize when we discuss about the Mediterranean region as a whole is that we risk failing into a spiral of pessimism. So we desperately need from time to time some light, and thank you for drawing the attention on very important processes like digitalization and digitization that are happening in many, not only medium-sized or big companies, but also small companies in the region, and how SMEs are also going into the green transition, which, as we already stated, is a good way to advance this path towards more sustainable and resilient economies. So hopefully now we will have some time for Q&A and comments. We have 15 minutes left, and I have a number of questions. So I will start by posing you all a question by Cristina from Italy. She's asking, how do you explain regional disparities in the MENA region with, for instance, Morocco doing better, while Tunisia and Egypt performing worse? So I don't know who wants to answer first, as Morocco is posed in a better position. Well, I don't know if you, Jessica, would like to answer, or maybe Nadine, or Hisham, or Neja, as you wish.
Je ne pourrais pas faire la comparaison entre les deux pays.
I cannot compare the different countries. I can say what has been done in Morocco. The access to funding, I have to say that we worked hard. During COVID times, we couldn't reinvent the wheel. In fact, we were working hard since 2019 with the main financial actors. Since 2019, the access to funding was already important. The figures we were talking about, we talked about 17% on the bank loans in favor of the non-financial companies. So the SMEs had already access to funds. So 33% of credits were granted to non-banking companies. That's the first point I want to address. There was a certain dynamic of the bank sector. As we can see, some credits increased in Morocco, and Moroccan banks are throughout the African continent. There was also the idea of saying that we were going to support the SMEs. We knew that the role, the SMEs were playing a major role in our economy. So we developed with our banking partners a sort of offer to foster the companies on the BFR, the development of the companies. Each moment, each period is important, and we had to provide a response. The digitalization was our core business. it is true that this environment was demanding such like an army, let's say, to tackle this crisis. In 2019, we opened 30,000 files, and staff moved from 85 people to 135 because there was a huge increase of our production during this period, and we tried to make a balance. We also tried to open up new leverages. We worked closely with associations that were accompanying these SMEs. We also incorporated the microcredits to help companies to move from the informal sector to the formal one. There was work undertaken. It is huge work that has been done thanks to these public and private partnerships with open tools and sharing the risks. And thanks to this work, we just had to agree upon some mechanism, and just several weeks after the onset of the pandemic, we were ready to work closely with the banking sector. As you said, in any case, the challenges are relevant. I have to be optimistic, of course, because if we want to drag people up, we have to remain optimistic. But when you have a look at the results of 2021, the growth will be of more than 6.6 points in commerce, trading activities and construction activities are up, and because everything which relies on tourism, they are facing tough moments because there are too many uncertainties. Thank you, Hicham. Neja raised her hand. Yes, I wanted to answer Mrs. Christine about this question. If we talk of comparisons between countries, I just talked of what the CDC was doing as capital investors and public actors in investments. But the reality is that in Tunisia, there was a dynamic that was created since the very first day of the lockdown, 1st March 2020, with the Ministry of Finance. We started with the platform. All the SMEs registered to be able to cover the expenses, because all the sectors but the agro-food industry that stopped. In fact, we had to find mobilization, quick aid mobilizations to pay the staff wages and the recurrent expenses. And we were working at the back office to screen the needs. There was a mobilization of fast funding via the banks, and a huge part went to the capital investors. And that's why we created these urgent funds that we set up, as well as the platform that allows to be digital, so these SMEs could get funds. at the financial sector was very important for Tunisia. In fact, as I told you, there was this report d'échéance. There was a very important effort by the banks. We wanted to help these SMEs with the mobilization of these COVID special credits with the measures put in place by the central bank, and even some SMEs that had some troubles to reimburse these loans, they could postpone their payments, so their reimbursements. All microfinance structures could postpone the reimbursements, and this helped these SMEs to keep working, but the CDC was focusing on the startups. And we mobilized these urgent funds, these survival funds for these startups. So at the end of the day, even with particular and temporary solutions, we could save many of these SMEs, and we could respond to their urgent needs of cash. Because when you do not have revenues, you do not have sales, you cannot pay your bills. Because unpaid wages would have been a catastrophe, and we wanted to bring some air to these SMEs so they could be resilient and face these crises that hit all the sectors, not only the tourism one. In the industry, there are export sectors that were absolutely paralyzed during this COVID. They were frozen. There were no air transport, nor maritime transports, and they were absolutely frozen. So the move to digital was crucial. We switched to teleworking. We were working from home, but we could work a lot on how to respond to these needs of this layer of SMEs with very limited means.
Some minutes for a second question. I'd like to ask this question to maybe Nadine and Jessica. It's a question from Sukaina from Tunisia, which reads: the gender gap is significant when talking about SMEs access to finance in the region, with only 4% of MSMEs led by women declaring themselves that are well served by the financial sector. What measures could help tackle this gap? So gender inequality. Jessica, go ahead, and then Nadine.
So I think, different regions, have different numbers. And so we talk a lot along with the financial services. We see that countries and regions that are successful with this, financial institutions and other players are providing non-financial services. So some of those kind of push and pull methods to get more women into entrepreneurship and providing them services and benefits that really help them. So that could be around training, that could be support groups, that could be support with access to markets, those types of things. Things that we haven't necessarily seen as successful are things like a pink card, something that is really framed as almost kind of downplaying women's needs and what they do. So I think that access to technical services, access to technical support, understanding the specific market in terms of what that looks like, and whether or not that's given by governments, private players, financial institutions. Those are some of the non-financial services or beyond financial services that we're looking at that can really help women to start and to grow businesses. Nadine, you may have some more specific regional ideas.
Yeah, thank you, Jessica. I would encourage people to read, one of the blog articles that we've written after the fintech study that's called, closing the gender gap in 15, not 150 years, because that's the time that you'd need at the current pace to close this gender gap. So we've looked at all those cases that were specifically targeting women and how they were able to actually advance access to financial services to women. I would say two things are really important. One is to really understand what are women needs, what are their behavior. One example, for instance, they need a lot more information before signing on a contract for a financial service provider. So you really need to kind of get into the details to make that happen. That's one. There's plenty of others. And another even more important thing is that you do need to be deliberate in your approach. So when we were surveying those fintechs that we have identified, there's only 2% of them who actually specifically cater for women. And so you actually really need a lot more deliberate approach to really get to offer those services to women, to tailor them, and then to troubleshoot whenever it doesn't work. And we can do it within 1 generation instead of 10. I'll stop here.
Well, thank you so much. And with these encouraging words, and being 12 o'clock, we try to stick on the time, because this online format is somehow heavy sometimes. So we want to stick to the 90 minutes. We started on time and we want to finish on time, but I cannot close this wonderful webinar without thanking wholeheartedly our dear speakers today, Hisham, Nejia, Nadine, and Jessica, for not only their wonderful and interesting and relevant presentations, but also their afterwards interaction. Access to finance remains crucial to help businesses and individuals cope the severe effects of the COVID-19 pandemic, while increasing their resilience in the face of future economic adversities. Advancing towards a comprehensive financial inclusion in the region is indeed of utmost importance to boost economic and sustainable development, and especially, as our speakers have been saying, to reduce poverty and promote job creation, which is an absolute condition to foster inclusive economic growth. I know that we are all the time speaking about inclusive and sustainable economic growth. I do hope that we will be able in the near future to move from words and declaration into practice and action. And I'm confident that institutions like the ones that today they have been participating in this webinar of the MED Confederation do contribute to achieve this better and more prosperous future for all. So thank you very much to all who followed us from Zoom or YouTube, and we will all stay in touch. Thank you.